All right, let's dive right in because we've got some massive news coming out of the electric vehicle world. The Chinese automaker NIO just dropped an absolute bombshell, a surprise profit alert, and it has everyone talking. So let's break down exactly what this means.
And yeah, people are calling this a monumental event. You see, NIO didn't just share some good news. They released it early. They basically said this is too good to wait for the official earnings report. Now that is a huge signal of confidence.
So what's the big number? Well, NIO is forecasting a fourth quarter non-GAAP profit somewhere between 100 and 172 million US dollars. Now, why is this such a big deal? Because it marks the very first profitable quarter in the company's entire history. The whole era of just burning through cash to grow, that might finally be over.
But this announcement is about so much more than just a number on a balance sheet. It's really about fundamentally changing how the company is seen by two really important groups: investors and, of course, the people who actually buy the cars. For investors, it's pretty straightforward. This is a clear sign that NIO is becoming a self-sustaining business, which means there's less risk they'll need to issue more stock just to raise cash. But just as important, if not more so, is what it means for car buyers. This gives them some serious peace of mind. It directly fights back against a major fear that competitors have been using against them for years. So, according to our source, the #1 tactic that competitor salespeople would use was to plant seeds of fear, uncertainty, and doubt. They'd hit potential buyers with questions like, "Hey, do you really want to buy a car from a company that's losing so much money? I mean, what happens if they go out of business? You'll have no service, no updates. You're basically just going to be left in the dust."
And that is why this announcement is so powerful. This profit alert completely neutralizes that entire argument. You just can't credibly claim anymore that NIO is on the verge of collapse. This builds a ton of brand trust and reassures customers that yes, this company is absolutely here for the long haul.
Now, this profit alert wasn't just for customers and the long-term investors. Oh no. It was also a direct warning shot to a very specific and very aggressive group in the stock market: the short sellers. So for anyone who's not familiar, short selling is basically betting that a company's stock is going to go down. You borrow shares, you sell them immediately, and then you hope to buy them back later at a much lower price. Then you return the shares, and you get to keep the difference. It is a very high-risk, high-reward game.
And here's the thing. NIO has been a heavily shorted stock for a long time, which means a lot of powerful investors were betting against it. Well, this profit news is pretty much a nightmare for them. The whole reason for their bet, that the company couldn't make money, it just vanished overnight.
This whole situation could kick off something known as a short squeeze. Basically, if the stock price starts rising fast, the short sellers get scared and are forced to buy back shares to limit their losses. But all that buying just drives the price up even higher, creating this crazy upward spiral. The feeling in the source material is pretty clear. This is a major blow to anyone betting against NIO.
Okay, so with all this amazing news and the real possibility of a short squeeze, does this mean NIO stock is just guaranteed to soar from here on out? Well, not necessarily. The reality, as always, is a little more complicated.
The short answer, and this might surprise you, is no. Look, hitting profitability is a massive, massive milestone, but it also completely changes the entire conversation around what the stock is actually worth.
So the debate just shifts. The bull case is obvious. Bankruptcy risk is basically zero, and NIO is a cash-generating machine. But the bears just changed their argument. It's no longer about whether NIO will survive. Now it's about valuation. They'll start arguing that the company is overvalued based on its price-to-earnings multiple, essentially saying its stock price is too high for the profit it's making.
And if you want a perfect real-world example of this, just look at NIO's competitor, Li Auto. They've been profitable for a while now, but their stock price has actually fallen quite a bit. It just goes to show you that being profitable does not automatically mean a stock's going to go up forever. So what do investors really need to see for this stock to truly take off in the long term? Well, the analysis points to two key things. First, NIO has to prove this wasn't just a fluke. They have to deliver consistent profits. And second, maybe even more important, they need to show that those profits are actually growing every single quarter.
So, where does all this leave us? I mean, what does this moment really, truly mean for NIO's future?
I think the biggest takeaway is that this isn't the finish line, not even close. This is the starting pistol for a whole new race. It's the beginning of what could be a major turnaround for the company, a really pivotal first step in proving it can be a long-term, sustainable, and maybe even dominant player in the EV game. There's one last strategic angle to think about here, and that's the timing. By putting this forecast out early, NIO sets the expectation. Now, if they only hit the low end of their own forecast, the market could actually be disappointed. If they had just waited and dropped it as a surprise on earnings day, that shock and awe factor might have had an even bigger impact. It's a gamble, and we'll have to see if it pays off.
And that, I think, leaves us with the ultimate question. NIO has, without a doubt, turned a corner. The threat of just disappearing is gone. But is the road ahead a wide-open highway of growth and bigger profits, or will these new challenges of valuation and high expectations create a whole new kind of storm? Only time is going to tell on that one.